Welcome to Spidell's California Minute. I'm your host, Catherine Zidane. This week we're covering reporting income after a taxpayer leaves California. We'll be covering non-resident taxation in detail at Spidell's 2025 Summer Tax Webinar, and you can see a full list of topics and get registered at caltax.com under webinars. We frequently address the issue of when and how clients can show that they've established residency outside California. However, changing residency from California to another state impacts how income is reported and taxed. Determining how the income is taxed depends on both the type of income and when it was earned. California residents are taxed on their entire taxable income regardless of source, while non-residents are only taxed on income from California sources. Part-year residents are taxed on all their income earned while they were California residents, regardless of source, as well as all income derived from California sources while non-residents. Here's how California treats certain types of income for a taxpayer who is leaving California. Wages attributable to work performed in California, including incentive payments, are taxable by California, even if the pay is received after the employee leaves California. Generally, a non-resident's sale of stock is not taxable by California. However, if the taxpayer elects installment treatment and the installment sale occurred while the taxpayer was a California resident, future installments are taxable even if the taxpayer is a non-resident when the installment is received. Sales of California real and personal property are taxable if it is California property. Non-residents are also taxable on installment payments received from the sale of California property, even if the installment is received while the taxpayer is a non-resident. Interest and dividend income is not taxable by California unless it had a business or taxable situs in California, or unless the intangible income is from an installment sale that occurred while the taxpayer was a resident. California does not tax the IRA distributions of a non-resident, even if the IRA contributions were made while the taxpayer was a California resident. The tax treatment of deferred compensation and stock options is often confusing for taxpayers, and this is where tax professionals can provide invaluable guidance for their clients who are considering moving into or out of California. When a taxpayer is granted a non-qualified stock option while a California resident and later exercises it while a non-resident, the income is taxable to California to the extent the compensation is reasonably attributed to the services performed in California. This is generally determined by multiplying total compensation received by a ratio of California workdays to total workdays. Sale of stock by a non-resident acquired from an employee stock purchase plan while the taxpayer was a California resident is taxable by California. A taxpayer who is granted an incentive stock option while a resident of California, but exercises it and disposes of it in a qualifying disposition while a non-resident, will not be taxed to California on the capital gain portion. If, however, the taxpayer disposes of the stock in a disqualifying disposition, the wage income is taxable to California using the rules applicable to non-qualifying dispositions. For AMT purposes, ISOs are treated the same as NQSOs. The spread income is taxable as compensation at the time of exercise. Because California conforms to federal law, the AMT wage portion is taxable to California at exercise using the proration formula for NQSOs. A taxpayer who is a non-resident when a restricted stock unit vested but performed services for the employer in California before the RSU vested has to use a reasonable allocation method to determine the portion of California-sourced income received. This is generally a workday allocation. We covered this topic in Spidell's California Tax Letter, a monthly newsletter plus a searchable online archive of back issues that keeps you at the leading edge of the state tax issues that impact your clients. You can get more details and subscribe at caltax.com under Publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.